Good morning and good afternoon, everybody. Appreciate everyone taking the time to join here. Just quick sound check. 1, 2, sound check, 1, 2. Okay, sounds like all is good. Everybody, thank you for joining the State of the Software Development Market update as of March 2023. My name is Steve Taplin. I am the CEO of Sonatafy Technology, a global software development firm. I also write for Forbes and Entrepreneur magazine. And I like to do a state of the market every few months to give my opinion of the market itself, what's going on. It's difficult to be caught up in the headlines of the mass headlines that cause mass hysteria, to really peel back the onion and see what is going on in the market and what is not. When I'm writing for Forbes and Entrepreneur magazine, that's really the approach I take, is trying to peel back the onion of news you're hearing and provide research and my opinion on that, on where I think things are and how things are going. So appreciate everyone taking the time. We still have people jumping on here, but we will go ahead and get going here. And so wanted to start just by kind of showing some select headlines. And as we look at the market, as we look at layoffs, as we look at things that have been going on, November of 2022 is kind of when things started to take a turn for the worse in the markets, when we started seeing the layoffs start, as we've seen interest rates and inflation continue to go up. And, you know, when you look at the different headlines out there, a lot of it's been confusing because there's all these talk about layoffs, about doom and gloom in the market. But on the flip side, you hear stats like unemployment is still at the lowest levels it's been in 40 or 50 years. And you look at, well, some jobs in the tech world are still in high demand, some are not. And so with this webinar, I like to peel back the onion on these, talk about what I'm seeing in the market, look at different articles out there. And, you know, despite where the headlines, the mass layoffs with tech companies, we consistently see that experienced software developer engineers continue to be in high demand. And sometimes when layoffs occur at a company that happens to be a tech company, you have so much bundled into what's laid off, you don't know what's at risk, what's not. And kind of some interesting headlines as we look at over the past couple months. One thing in particular, as I mentioned, unemployment continues to be less than 4%. Which, despite all the headlines we hear, despite all the mass layoffs, companies are still having challenges finding the right talent. This was kind of interesting, but there was an article on Insider that Amazon had over 25,000 job openings, and only 7,800 of those were actually approved. And one of the things I want to talk about today is some of the overhiring that occurred in tech, and a term that's been coined, vanity hiring, which some of the large tech companies have been accused of. Just last week, one of the largest, known as one of the most stable technology companies, Accenture, announced that they're doing 19,000 layoffs, which is about 2.5% of their workforce. Now, Accenture has over 700,000 people that work for it worldwide. But in spite of the downturn, in spite of things going on, that was a big announcement as far as the state of the market, and one of the larger, thought of as one of the more stable companies having to do layoffs. So all this information out there, you got to dig deep, figure out what's true, what's not, and form your opinions based on that. So here's just kind of a summary of some of the largest layoffs that have occurred in 2023, with the recent announcement from Accenture. That is the largest of this year, but once again, you have to put it in perspective. 19,000 people, but there's over 700,000 employees. It's less than 2.5% of their workforce. Google has had layoffs, Facebook, Amazon continues to do a lot of layoffs. They previously were at 18,000 for the year, but they announced another 9,000 layoffs. One of the challenges when you look at these numbers is they aren't always telling you who's being laid off, what departments, what areas, what's going on. And this is an interesting chart from a very informative website that talks about tech layoffs. It's called layoffs.fy, or the URL is layoffs.fyi, and showing the trends since January of 2022 of layoffs that have occurred in the industry. According to layoffs.fyi, this year there's been 529 tech companies with layoffs. To put it in perspective, there's over 585,000 tech companies in the US, so less than 10% have occurred layoffs, and 153,000 tech employees have been laid off in 2023. So these, when you look at these large numbers, these are the things that really dominate the headlines. And if you're not familiar with peeling the onion beyond that, figuring out what's really happening takes some diving and due diligence. So when we look at what really happened here, is in the large tech industry, there was mass hiring during the pandemic. And what many people are saying is there was way too much hiring during the pandemic, and there was artificial demand, and there were people being hired for the purposes of promoting the company and the stock price to make their numbers and what they're doing look better. But an interesting stat here is when you look at where things were before the pandemic and where things are now, it's showing that a lot of the gains, or most of the gains from before the pandemic, are still in place with these large tech companies. A trend that has been popular that continues to make the news is companies are getting rid of what they're referring to as middle managers. And more specifically, they're getting rid of people who are solely people managers and don't necessarily have deliverables or do direct work. I know I've been an entrepreneur for most of my career, but had some stints at very large tech companies, and many corporate environments are very bad about having managers for the sake of having managers. And Facebook's kind of led the charge of getting rid of middle management, making sure everybody, including managers and executives, all have direct deliverables outside of just managing a team. So that's one of the key trends going on right now, is a focus on middle management, focus on productivity. When we look at what's gone on in the market, certainly interest rates have been a big part of layoffs going on. It's making lending more expensive. It is affecting valuations. It's affecting the ability for mergers and acquisitions. And as we look at since November of last year, fast forward to where we are, March, the end of March here, 2023, there has been this ongoing lurking challenge of, is there going to be a big recession in the US and worldwide? We all know that the Fed continues to raise interest rates. We all know that there have been banking failures, that there's geopolitical risks in the market with the current war in Russia and Ukraine. And a positive thing for the markets is Silicon Valley was the first major bank to go under from this new environment of rising interest rates. Which Silicon Valley Bank happened to be one of the biggest technology banks. And as we've all read, the Fed stepped in, insured depositors, which with that company, most of the depositors were companies that had their operating payroll in there. The FDIC has always insured everything within banks up to 250,000, and the Fed stepped in to insure everything above the 250,000. And although I'm not a big fan of socialization of our banks, and the behavior that saving banks, like what happened with Silicon Valley Bank, Signature Bank, and others, is going to do for the market and for the banking industry, it has given some reassurance to the market, as it relates to technology ventures. There was a week-long period between when Silicon Valley Bank went under and the Fed stepped in and made funds available, where companies didn't know how they were going to make payroll. They didn't know how to access their capital. The Fed did move very quickly with that, and it has caused some reassurance in the market. Since Silicon Valley went under a couple of weeks ago, there have been other banks that have gone under. They've been less publicized than Silicon Valley Bank, as they were a lot smaller. But same thing between the Fed stepping in to make sure depositors are not losing their money. There's been a cohort within the banking industry itself to buy up assets and help each other. It's kind of a too big to fail situation. But with that said, it has brought some reassurance to the market, where we're seeing projects start to pick up. I think everyone has realized, all right, 2023 is going to be a rough year. Whether we call it a recession or whatever we call it, there's going to be challenges, but projects still need to move on. There's an interesting dynamic going on in the market that many journalists are calling the Twitter effect. And the Twitter effect specifically relates to Elon Musk going into Twitter and basically firing 75% of the people. Everybody has, I'm sure, read tons of stuff on Twitter. Elon Musk overpaid at $44 billion for the company, came in and has just done massive cuts. To date, they're about 75 to 80% of the staff they were since before Elon Musk took it over. And one of the ways the market is reacting to that is, look, Twitter, which they classify as a technology company, just got rid of 75 to 80% of its employees, and they're still operating. They're still up and running. They're still, now they have had flaws, they have had glitches, but not enough to hurt end user credibility to that. And so now it's run the situation where venture capital and private equity firms are challenging CEOs out there, saying, look, Elon just got rid of 75 to 80% of the staff in Twitter. Why can't you do the same? And Salesforce has been another company that has had a lot of layoffs, that has gone through growth, where investor activists are pushing them hard. And this is being referred to in the market as the Twitter effect, where CEOs are being forced, whether they want to or not, by their investment groups, by their majority shareholders, to take a look at how do you cut your team, be more efficient, be more productive. And look what Elon just did. Now, that's probably not the best comparison, because Elon Musk did absolutely go to the extreme, but that's one of the factors going on in the market. Another factor that large private equity investors are saying has occurred during the pandemic was vanity hiring. Vanity hiring, in their definition, was big tech hiring people that didn't really have much responsibility at all, just to report during the pandemic, when things were booming, that they've hired X number of people and that they continue to increase their workforce. And a lot of the layoffs that have occurred at large tech, after the fact, employees are saying they didn't really have much responsibility at all over the past couple of years that they've been there. And so that's another buzzword that's happening in the market, is around vanity hiring. So the Twitter effect and vanity hiring are things that really didn't exist a month ago or 6 weeks ago, that are becoming more prevalent in the market. And that's referring to those situations. So when you dig deeper into the trends themselves, despite layoffs, despite budgets being cut, we continue to see digital transformation and software engineering be core for most businesses out there. One interesting thing, one of the biggest employers of laid off software engineers from the tech layoffs has been non-technology companies who have their own tech or are developing their own tech that didn't have much of an internal workforce that have taken advantage of the current market conditions with great talent being on the market. And so it's kind of interesting, this shift from it was prestigious to work at large tech to non-tech companies picking up solid talent around software engineering, around digital transformation. The trends are continued to grow, expect to grow around software engineering, the demand in the marketplace. And one of the most conflicting statistics out there when you look at all the big news around layoffs is the fact that unemployment has continued to be very low. In January, there were 517,000 jobs added to the market, which was triple of what economists has estimated. For February, there was a jump in 311,000. And unemployment right now peaked up last month, or in January, it was 3.4%. The latest reports for end of February is unemployment is at 3.6%, which is still at one of the lowest levels since 1969. So it's an interesting dynamic when you hear mass layoffs and then you hear unemployment continues to be at record lows. From a software engineering perspective, there is the situation right now where there are still 5 jobs available for every 1 experienced software engineer available in the market. And I mentioned earlier about the dynamic around vanity hiring. And this is something now that you have vanity hiring, you had what was referred to as fake job postings that is being scrutinized even more right now. And so companies just putting up help wanted job ads, LinkedIn job ads, Indeed job ads to make it look like they're still growing is going under even more scrutiny right now, now that a bunch of companies have been called out on it. So when you look at stats and you look at things like 5 jobs available for every 1 experienced software engineer, these numbers are expected to be a lot more accurate than they were even 60 days ago before these things were scrutinized and scrutinized. So with that, it was interesting, a report from US News earlier this year. They had their list of 100 best jobs for 2023, and software developer was #1 on that list. So as you look at what's going on in the market, where things are being cut, there is still a huge demand around software engineering, experienced software developers. Now, where there is a gap and there is a challenge is training new developers coming out of college. That's been very hard with the remote environment. But one of the trends we're also seeing that is prevalent with a lot of companies is they're trying to eliminate or dramatically reduce work from home. They're trying to drive people back to the office. And there's good and bads of that situation. The good of that is it's going to help recent college grads gain necessary skills they need for the workforce. But for experienced workers who are used to working from home, that's definitely a controversial thing, especially in the software engineering side. Software engineers are generally extraordinarily smart people and introverts. They're typically not the type of people that go to an office and mingle. They need to have their headphones on, get in their zone, and focus on their programming. So that's definitely a interesting dynamic going on right now. Elon Musk with Twitter within the past week sent a 2:30 a.m. email saying no more remote work. I don't care your situation. You're coming into the office every day or you don't have a job. So there's definitely a lot of interesting things going on in the market. Other interesting trends going into this year. California has always been the top spot for software developers, and New York and DC have taken over as the leading markets hiring software developers, which is kind of interesting. There is a lot of chatter about OpenAI and ChatGPT, and will they make jobs obsolete? Will they take over programming? Will they take over programmers? I'm of the strong opinion, and wrote a recent Forbes article on this, that these tools, it's going to be decades before they can actually replace software developers and engineers, but they can help them be more efficient. They can help them come up with ideas, do QA, do some other facts that can help them be more efficient. But I think we're still a long ways away from that completely taking over. As I mentioned earlier too, non-tech companies are really the bright spot for software engineers. Developers that have been laid off since November of last year, 52% of them have found new jobs with higher pay. The average time frame for that has been just over 3 weeks. And another 29% of those have had new jobs where they got equal or slightly less pay. So there's a reshuffling of resources in the tech market, not necessarily a pullback of the need for that. And that's one of the key things that, as part of this webinar and my report of the state of market, that I really want people to understand. Large tech, big names make the headlines, but this talent, and good talent, has been snagged back up by other companies. Now, with that said, you have to be on top of your game. You have to make sure you're productive, that you're a leader, that you're proactive versus reactive. So everybody is on notice, but with that said, the A players are still in huge demand in the market. So I like to do what I call the good, the bad, and the ugly. And so when we look at the current market, the good is that there's still a huge talent gap in the digital transformation and the software engineering space. And through 2027, this is expected, this gap of the available talent versus what's needed in the market continues to get bigger, which is a good thing for those in the software engineering market, despite this short-term ugliness that the entire market is going through. What I call the bad right now are the banking meltdowns that have occurred. The reason that's not completely ugly versus bad is that they are being contained. Companies are still able to access their funds despite banks going over, which has taken this bad situation, which will probably continue to get worse, but the actions of the Fed are mitigating the risks on the market. And I think there's some confidence being seen in that. Also, the bad is this overhiring that have occurred and this vanity hiring in the tech space that is inflating layoff numbers right now and giving the impression that things are worse than they really are. And then the real ugly of right now is, we still have recession risks. Inflation continues to go up. Interest rates keep going up. There's less investment being done right now in businesses, largely based on risk and based on higher interest rates, which all of that leads to tighter budgets. And I'm of the mindset that if we keep trekking down the path we're on, short of the geopolitical situation in Russia and Ukraine getting worse and expanding to other parts of the world, my humble opinion is that we've kind of seen how this year is going to play out. We're starting to see some restored confidence. It's not going to be a banner booming year here in 2023, but with that, the world is not ending. And companies have done pullbacks to make sure they're positioned to take advantage of this market and where things are going on to make sure they're well positioned for the long term. So, with that, and we purposely like to keep these webinars at 30 minutes. We know everybody's busy. Really glad to see the huge number of participants we have here. And I'm going to go ahead and pause and open it up while we have 5 minutes left to talk about Q&A, and see if anyone has any questions, if anybody, anything that we want to bring forward here. I'm going to ask Josh here to come to the forefront to help with question and answer. If you have any questions you'd like to ask, please put them in the chat. With this many people on the webinar, we can't open the lines up. It'll get too disruptive, but please, in the chat, feel free to ask questions. And Josh, I'll let you start ratting off questions to me here.
Sure thing. Hello, everybody. Tayaru, I see that you've raised your hand. You could go ahead and ask the question in the webinar chat function, and we'll just have Steve answer that as well. I think we've got another question. Oh, okay, this is a good question. This is from Nicole. As CEO, how have you kept your company morale high and focused despite scary news articles and headlines?
So great question, and Nicole, appreciate you answering that. I am a big believer that you need to over communicate with your team members, and make sure they understand what's going on in the market. You can't cover up what's going on. You can educate people of what you're seeing, about what your interpretation well beyond the headlines are. Keep in mind, most news outlets, unfortunately, are focused around entertainment as opposed to what's actually going on. And chaos and the world ending is what gets viewers, is what gets advertisers. But over communicating with team members, always letting them know what's going on in the market, not bullshitting them. You got to treat everyone with respect. We're all big boys and girls, and as we've done updates internally with our workforce of over 160 folks, some of the feedback we've gotten is they appreciate the real update, what I think is going on, what I predict for the market and for the team. And so over communicating in this type of style with presenting facts, talking about the news articles and giving opinion is a big, really how I recommend attacking that. So thanks for that question. Josh, what other questions do we have?
All right, so from Julio, we've got, is Sonatafy the same as Fiverr or Upwork?
Oh, and I was just going to go ahead. So is Sonatafy the same as Fiverr and Upwork? No. Sonatafy Technology is a nearshore software development company. Places like Fiverr and Upwork will provide companies what's known as gig workers or temporary workers. They may or may not have multiple projects or things they're working on. With my company, Sonatafy Technology, we currently have over 140 engineers. All of our engineers are full-time team members of our company. We don't have gig workers or part-time workers, and clients are engaging us because they need help either supplementing their existing teams or fully taking over projects. And so we're typically doing long-term engagements, not short-term gig work. So thanks for the question. I appreciate it.
Great. I see Ryan has his hand up. Actually, if you could use the Q&A function in Zoom, in the Zoom options, there you can ask your question. So here's a question from Tayaru. The market's tide has turned in favor of employers. How are companies keeping up with treating the candidates updated on feedback? How are they being respectful in feedback loop?
So Tayaru, great question, and I appreciate that. And that's definitely something that is taking over the headlines, is that the power dynamic during the pandemic, when there was huge demand, when you could work from home, that the pendulum was on the side of employees themselves. And too many companies are talking about taking the power back and having more power and control over their employees. And having some experience in the corporate world is a big reason why I'm not in the corporate world. Why I like to build my own companies, because I'm not a fan of leading by intimidation or holding people hostage or playing that power dynamic game. My approach, my 2 cents is that you need to find smart people, you need to treat them with respect, you need to have an environment of openness, and make sure that you're not playing power games, which is unfortunately too common in the large corporate world. But that is unfortunately how that dynamic often thinks. And so the good employers there will make sure they're not using that to pressure team members or to get even for them having the power that they have had. So thank you for the question. I appreciate it.
We've got a question from Samuel. Do you think it's important to start migrating to IA technologies instead of C#, Node, et cetera, or do you visualize market for web applications in long-term future?
So that's a great question. I think that we're going to continue to see diversity in tech stacks and technologies that companies are choosing. One of the things I think that the market has seen that is coming back to bite them is there was this mass migration that you had to have everything on the cloud, and that was the most efficient way to do things. And now fast forward to where we are, companies are finding that they're spending way more than they should on their cloud environments because they migrated too much. So, my 2 cents on your question of the importance of migrating off of conventional technologies in the long term, I think that customizing that end user experience will continue to be the key differentiator for companies. And the best example I can give was the rush to the cloud, which I certainly understand that's an infrastructure play as opposed to a software technology play. But I think it'll take some time to see how the market continues to evolve. So thank you for that question, Samuel. I appreciate it.
And I know we're a little bit over time, but we've got a couple more questions to get through. These are all really, really good questions. One more from Mike. So if there are so many developer jobs available, how are you able to consistently retain quality and talented engineers? I really like that question.
No, and Mike, thank you. That is an absolute great question. And, number one, you have to pay people well and make sure that they are paid for their skill level. And then number two, you have to make sure to have the right environment that wants to keep people. Sonatafy Technology, our current engineer attrition rate is around 7%, which is about half of where most of our peers are. And even when things were extraordinarily crazy in the upturn of the market, we were still able to keep a very strong retention rate by creating the right environment, having mutual feedback. I always like to tell all of our engineers in one-on-one meetings and others that life's always going to get in the way. And as long as we have great mutual respect, that we're honest with each other, that we'll always be there to help them when life does get in the way. And so that right culture, that right environment is what I view as the key for retention. So thanks for that question. I appreciate it. I will say, and I know we're over, if anyone would like a copy of the presentation or have additional questions, I'm happy to stay on further and chat. But anyone, you are also welcome to email us or go to our website and request more information, and happy to talk further about my opinions of the market and all of this. So let's keep going here with questions.
Okay, so from Ryan, we must have US citizens for tech workers. Security clearance requirements for DoD and DHS specify this. Are you able to guarantee that workers you provide are US citizens?
Ryan, appreciate that question. So certainly when you're doing government contracts and they require US citizens, that certainly understand the requirement behind that. Our company, Sonatafy Technology, we specifically hire engineers out of Latin America, where we have same time zone support, English speaking support, and great talent, but at a lower cost point than the US. So our engineers typically don't qualify for those types of contracts where you have to be a US citizen. Certainly understand the question and where that need is on the market. And many companies like Sonatafy that does hire workers outside of the US won't qualify for those types of contracts requiring that. So definitely appreciate that question.
All right, we've got 3 more questions. We'll get through these quickly. So Jose wants to know, if a recession were to come to the US, how do you see the impact on nearshore development for the IT industry? Considering IT talent on the nearshore markets is a more economic option, will it be increased or decreased due to tight budgets?
So Jose, thank you for that question. So, if there's anything I tried to stress during this presentation was that the demand for nearshore, or I'm sorry, for software engineering, despite whether or not a recession gets worse, despite things get worse, the engineering initiatives are out there, and it's not going away. So certainly, if and when things get worse, we're going to see budgets be tighter. We're going to see companies continuing trying to do more with less. And one of the reasons the nearshore development industry has taken off like it is because modern technologies have found that collaboration with same time zone support is extraordinarily important to productively produce software in current tech stacks and current technology environments. So I think that despite good or bad times, that the nearshore software development industry is here to stay and will continue to grow. So thanks for that question.
All right, we've got an anonymous question. What innovative strategies is your company implementing to help businesses navigate the digital transformation process and increase their competitive edge in the market?
So great question, and appreciate that. With Sonatafy Technology, 65% of our clients are in the healthcare and life sciences sector. And so we do a lot of work in that space, as well as in the fintech area where you have compliance regulations that you need to meet. And so we do a lot of innovative work in that space to help accelerate projects moving forward. With companies in other industries, we're constantly looking for niches to help them be more competitive, and whether that's modernization of existing technology or it's the creation of new technologies. We're always customizing our approach for every client and for every sector. So appreciate that question.
All right, Aiden wants to know, what would be the current technology stacks that Sonatafy prefers to use and hire for?
Excellent, Adam, appreciate the question. We are focused around modern tech stacks, both cloud and mobile environments. So we're seeing a lot of work around environments around LAMP, WAMP, JAM, Mean, MERN-stack. We do a lot of work in .NET, in Java, in Golang, a lot of mobile app work, React, Kotlin, and others. We also are seeing more and more demand in the DevOps space, especially as we've seen, and it's been proven that companies are spending too much in the cloud environments and not being efficient enough. We continue to see DevOps be in huge demand. So those are really some of the key areas we see that we continue to expand in. So appreciate that question.
And hope it's okay, Steve, but 2 more quick ones just came in. And then we'll probably be wrapping up the Q&A segment. I know we're a little bit over time, but these are all really, really good questions. So thank you, everybody. This one's from Mike. Please comment on the mainstream perspective that the talent and quality of engineers, developers from India and Asia are for the most part better or usually superior to those in Latin America?
Excellent, Mike. I appreciate that question. For a lot, Latin America is certainly newer to the market in terms of being a technology hub. No doubt, India, Asia has been a leader since really the 1990s moving forward, and the go-to for outsourcing. And what started happening in Latin America is around 2015, large tech started setting up operations in Latin America markets to focus on seeing time zone support with English speaking resources. Computer science degrees have been very big in Latin America, with the first round of graduates happening in the past 12 to 15 years. So it's definitely been an emerging trend that some are very familiar with, some are not. One of the biggest things we see from US companies and feedback they have, and there are phenomenal engineers throughout Asia Pacific, throughout India, where sometimes we see people get frustrated, is what I refer to as the yes culture. And the yes culture being, hey, we've gone through this. Do you have any questions? Do you know what you need to do? And from a culture perspective, many times they say yes, because that's, from a culture perspective, it's non-confrontational, and they would rather keep moving the project along than to admit if they don't know something or ask clarifying questions. And so sometimes that could be frustrating for US-based teams, where they stay up late to have calls with offshore resources, wake up and hope everything's done, and it's not. We have seen, because of tighter cultural ties, because of same language, a lot of feedback we get are that Latin America engineers are very interactive, are not yes people. We do a lot of training within Sonatafy, and where we'll make videos and do kind of quirky things to drive points home, like, hey, you're not stupid for asking questions. You are stupid, though, if you don't ask questions, you get to the deadline and you're not done. So things like that are really the big trends we've seen. So thanks for that question.
All right, everyone. The last question. This should be a pretty easy one. What type of industries are looking for IT companies?
Interesting question. So really, I would say all industries.
Yep.
Every company, I kind of laugh sometimes when the social media companies are classified as big tech, when technology is obviously a big component of it, but they're social media and social sharing platforms. Every company out there is realizing that they have to have tech as part of their business, whether no matter what sector they're in. And so, especially with non-tech companies being one of the biggest acquirers of big tech talent that's been laid off, we're definitely seeing a lot of movement in that area, and a lot more companies realizing if they don't have a solid tech component to their business, they need to. So appreciate the question.
Awesome. Well, thank you, everyone, for attending. I think we've got everyone's email addresses. We can follow up with a copy of the webinar, and also our top 6 advantages ebook. So thanks, Steve. I'll let you take it away from here.
All right, everyone, thank you so much. Sorry we went over, but glad to see we had a bunch of people stick through. This is a webinar we plan on doing every 60 days or so, with updates in the market. Open to any and all feedback, and appreciate everyone taking the time to attend. Have a great rest of your day.